Goldman Sachs is out with a new note this morning, warning that equity investors hoping for a better year in 2023 will be disappointed, saying the bear market is not over and predicting a volatile ride to the bottom here. Now, there's really a lot to break down in this note. One of the other notes, of course, within this, out from Goldman, is talking about the confidence that remains high in even a China second quarter 2023 reopening and what that could mean more broadly globally as well, too.
Yeah, this is a note out from Peter Oppenheimer. I'm a big fan of Peter Oppenheimer. He came out in late September and said the market is likely to come under pressure. That call was right, so I'm inclined to listen to what he's saying here. First line out of this note here, the bear market is not over in our view. I think he's really concerned about higher interest rates hammering corporate profits next year.
Yeah, and obviously that's something that's already been a theme, right? He does say if you look further out into 2023, the markets will transition to what he calls a hope phase, but it's just not that we're there yet. And I mean, this is not that different from what we've been hearing from a lot of other strategists, right? This refrain that until we get a little more clarity on the end of the tightening cycle, I saw another note this morning that talked about how it would be unusual for the market to bottom before the recession is even like this far in advance of when the recession actually begins. And this recession is very telegraphed. So this is not a totally off the reservation kind of view, right, that we were getting from Oppenheimer.
And this comes alongside the commodities team at Goldman saying potential for $100 a barrel oil. But I think they hedged their bets a little bit, and it fits what Oppenheimer said here. They're concerned about the impact of COVID lockdowns in China, what that means to the oil market.
Yeah, and what they had put within that note, they were waiting for broader market or broader macro stability to generate an increase in passive flows, but the burden of proof still remains on fundamentals. Their words there. They had also talked about the underperformance of WTI. But again, when you hear about some of those elevated oil prices, of course, not just year over year, but elevated at some of the more historical levels as well, that's something that consumers are also paying close attention to because they factor in, all right, how much is this actually going to impact the energy prices that I'm paying, the bottom line that is going out the door for me in the household?
I guess it's down to $4 a gallon, Julie. It's pretty good. I'm pretty excited about it.
Well, I guess
it wasn't like $6. Like, it was crazy.
Well, I guess the message is don't get used to it.
Don't get used to it?
Maybe.
If we're a little bit of good news. Anything? No?
Sorry.